All right, let's talk about Ericsson. Every earnings season, thousands of companies report, right? But every once in a while, one of them drops a report that just completely resets the entire narrative for the stock. And that is exactly what we just saw.
I mean, just look at this. The market's reaction was absolutely explosive. A jump of over 20% in a single day for a company of this size? Well, that's a massive, massive signal. So the big question is, what on earth did they say to set off a firework like that? And trust me, the answer is probably not what you're thinking.
So, to really understand that huge pop, we have to get in there and dissect the numbers. Because the real story, the one that actually lit the fuse on this whole rally, is buried just a little bit beneath the headlines.
Okay, so what's so fascinating here is what this slide doesn't show. I mean, yeah, they beat on revenue, but just barely. And that GAAP EPS number, it looks huge, doesn't it? But it was heavily inflated by the one-time sale of their iconectiv business. So let's be real, a tiny revenue beat and a messy profit number do not get you a 20% rally. Nope. The real story is somewhere else entirely.
And this is it. This slide shows the pivot the market went crazy for. On one hand, you've got the top line, which was kind of soft. Organic sales actually went down 2%. But on the other hand, the metric that traders absolutely seized on, adjusted gross margin rocketing up to 48.1%. This is a core measure of how profitable the company is, and the market just completely ignored the weak sales and focused like a laser on this one fact. Ericsson has become a much, much more profitable company.
So you've got to ask, how did they do it? Well, management was really quick to frame this margin performance not as some one-time fluke, but as the result of a deliberate, multi-year overhaul that is now fundamentally changing the company's entire financial profile. And you don't have to take my word for it. Here it is straight from the CEO, G.E.K. Holm. He's basically telling the market, look, this is the new Ericsson. All those years of making tough decisions, streamlining operations, managing the supply chain, cutting costs, it's all finally paying off. They've built a leaner, more efficient machine that can crank out higher profits even in a flat market.
And here's why that is such a game changer. This new profitability isn't just some number on a spreadsheet. It unlocks the next and maybe the most powerful catalyst for the stock, the potential for massive cash returns directly to shareholders. Just look at this war chest. The company is now sitting on nearly 52 billion Swedish krona in net cash. And management didn't just casually mention this. Oh no, they explicitly signaled that the board is now looking at increased shareholder returns, even name-dropping things like extra dividends and share buybacks. They basically just put a giant catalyst on the calendar for their Q4 report.
And hey, if you had any doubt that the market believed this news story hook, line, and sinker, just look at the volume. Trading volume on earnings day was over 4 times the 3-month average. This wasn't a slow drift higher, folks. This was a stampede. This is the chart of pure, unadulterated conviction that the company has turned a major corner.
So, let's put it all together. What does all this mean for the stock going forward? Well, here's our take. This is the next call, our forward-looking thesis.
So for next quarter, we think management's guidance feels pretty conservative, which is pretty typical for them. This actually sets up another potential upside surprise if the structural margin improvements hold. For the stock itself, we predict it'll probably consolidate around these new higher levels for a bit, before making its next leg up when that capital return plan is officially announced with Q4 earnings. So for all those reasons, we're moving our rating to outperform. The entire thesis is shifted. This is no longer just a bet on a 5G recovery, it's now a durable cash return story anchored by a fundamentally more profitable business.
This is not financial advice.